Hey everybody, welcome to Trading Capital's Daily Analysis video. In today's video, we're going to be discussing the indices, natural gas, oil, gold, and what we think is coming next for the markets now that we have a big headline CPI data set out of the way. So looking at the S&P 500, it actually finished positive today, up just 0.4%, but that's a nasty little reversal candle from the high. The markets were up quite substantially early on and basically gave up all of those gains. So what we saw was inflation. The CPI number came out in the morning at 8:30, and basically it propelled the markets. Let me just go to this intraday chart here. It actually propelled the markets much higher, gapped, and then when markets opened, they completely started trending higher, and then something happened. Well, what happened? Well, market participants started digesting the CPI data and analyzing it, and we started to notice that the Dixie ended up making a low and had a huge reversal. Look at that daily bottoming tail. What this is suggesting is that this is bullish consolidation to move higher. Now, it's not necessarily going to get there right away through this resistance level, but we have to watch because we're at the near-term cusp of a potential breakout in the dollar. So pay very close attention to that, because if the dollar breaks out of this pattern here, it suggests that we could have basically another $3 or $4 move up on the dollar, which would take us to about 106 and change. Now, do I think it needs a little more consolidation? I do, which is why I personally think the actual indices may try to stage a little bit of a bounce here. But as long as you hold this support, the spiders are technically okay and could bounce off of this level. If we get a gap down, I think that it's an opportunity to potentially buy and flip to the long side just for a quick long day trade bounce. Now, what was interesting today was that when the inflation came out, also in the yield market, it dropped yields. The two-year yields almost looked like it was triggering this head and shoulders on the daily chart, and the same thing with yields, rallied higher. Now, if inflation expectations came in lower and yields still didn't drop, what is that telling us? That's telling us that the bond market is assuming inflation is still going to be entrenched, and it did uptick. And the big question is it going to uptick again next month? Well, that's really going to depend on a large amount of commodities and pricing, and certainly I'm in the camp that we should see a little bit more higher CPI headlines over the coming prints, personally speaking. And that's what the bond market is also suggesting. And then even on the short end curve of the yield market, you look at the two-year yield, what was really stand out to me was the fact that the long end bonds, 20-year yield, look at that beautiful technical pullback, breakout, technical pullback back to support, and a magnificent bounce, a bullish engulfing bounce on the daily chart. This is the 20-year yield. If you're playing bonds, you often buy the TLT, and the TLT is just absolutely getting decimated. I still think the TLT has to hit this 91.90 level. That's where I would be likely a big buyer on the TLT play. And I do think that bonds are looking very lucrative, but yields have a tendency to keep trending higher. And once you get a bull flag pattern developed off of this area of support, this could be potentially making new highs in the coming weeks. So that likely means that if yields continue to trend up, inflation is also likely going to trend up. So just be mindful that yields technically are in a massive, a very strong uptrend, and that's never going to be good for the markets, considering where the inflation is right now, considering where yields are right now, and considering where the indices are trading. I mean, even if you look at the QQQ, the QQQ today finished positive. And right now, you can see that the Qs are right around this support level, just trading under it. It did fill a key technical breakaway gap here when you made it in mid-July. So that's okay right now. I do like the fact that the QQQ, even with the amount of selling and huge reversal off the highs, it did not take out yesterday's low, or sorry, it did take out yesterday's low, but it didn't close below it. That was a key factor for me. And when you look at some of the charts of these mega caps like Apple, when you have a daily RSI on Apple pretty much trading at the lows, it's notoriously likely to get a bounce off of this level. I'm not saying it can't trend lower, but typically Apple is that stock, that bellwether stock that does seem to catch a buy the dip mentality no matter what the conditions are. It's one of those stocks that are very difficult to take down, but since its earnings report, it's pretty much just been sell. And I do think that Apple's likely going to get a small technical bounce over the coming days. And if Apple gets a bounce, it should lift up the market. Even if you look at Microsoft, it is also technically weak, but still managing to hold this key support zone at this point in time. All right, let's move along to the Russell because the Russell sold off today. IWM had a big bearish engulfing candle, closing below yesterday's daily low. But the positive for the IWM is that you're still inside of this hammer reversal candle on the daily. So we have to give it the benefit of the doubt that even though the sell-off was pretty ferocious in the small caps, you did pretty much fill this gap, just missed it by a few pennies. But needless to say, you're still holding inside of this reversal, which suggests that you could have a bounce off of this technical level. Let's just run through some other stocks like Tesla. Tesla's a mega cap that I actually am looking at on the long side. So one thing I want you to pay attention to or take into consideration is this larger inverse head and shoulders that broke out. It hasn't fulfilled the full measured pattern, but I do like Tesla for a potential long trade. One thing I'm watching on Tesla, and let me just remove some of these trend lines just to make it easier. We have this down sloping wedge pattern that is very, very poised to break out. I almost went long today, and one thing I like about Tesla is that Tesla was up 1.3%, outperforming the S&P, outperforming the Russell, and outperforming the Qs. I wish it came down to fill this gap. That is, believe it or not, my technical level to go long Tesla. But if Tesla breaks out of this wedge, it could see a pretty big move to the upside. And right now you are getting the RSI to curl a little bit on the daily chart, so that is technically okay. On the weekly chart, you're still trading above that 50 zone, so that is also technically okay on the weekly chart. And you've had a decent pullback into support, and I think if Tesla starts to catch a bounce and the market firms up, that's when you really get the alpha behind Tesla. So keep this one on the radar for the long trade. Really on that note, I'm also going to touch base on natural gas and oil. My members were able to sell nat gas yesterday, UNG, pretty much at that high, that $3 mark, right at the gap fill. That was the level that I was waiting for, and look at that big pullback. Now, I still think that natural gas goes higher, but I would love to see it pull back to this 270, 271 zone before I start accumulating yet again a long position on natural gas. And I think that now that we filled this gap, and once we truly establish ourselves above this gap high, this $3 level, I think that's where we start to see nat gas go into a short squeeze zone. You know, look at this sell-off that transpired in very, very quick fashion. I still think we could see maybe something of that nature to the upside, at least taking us back to these multi-pivot zones over here, sitting at around $5.30. I think that's going to be the next big level. You know, once we get through this $3 gap, you could see a pretty big squeeze from 3 to 5, and that would mean a upside move of roughly about 74%. What would that do to inflation expectations if natural gas and the energy continues to surge higher? You know, even if you look at WTI, oil still holding up very, very well. One thing I discussed in my video 2 days ago was I said we were likely going to test and tap this this high over here, this wick high, and then we're going to likely see a rollover occur in oil, at least back down to this $74, $75 zone. We tapped that area, and now we're starting to see some weakness come into play. Keep in mind you have a negative divergence on the daily RSI for oil at the moment, being the fact that you made a new high today, but the RSI did not make a new high today, and it's starting to roll over. So I'm expecting some weakness. I wouldn't all out short the energy sector yet, but certainly some stocks are looking a little bit more juicier to short individual names. This is the XLE, tried breaking out today, had a little bit of resistance and closed basically back on that trend line. So we have to watch XLE closely, because if XLE has a failed breakout, you'll see the likes of XOM, you know, running into some pretty big resistance. You know, I just find it so fascinating, some of these trend lines here. Look at XOM trying to break through that and gets rejected. Now it could always have another run up and try to break through. It certainly has the backdrop with oil breaking out, but oil really needs to continue its uptrend. And right now, it's interesting to see, if you look at where oil price action is, you know, running into this double top resistance, and then you look at the dollar market, the DXY, also running into its resistance. So whichever one breaks out, if the dollar breaks out, it's probably going to send oil down, but if the dollar falls, it's probably going to cause oil to spike up to the upside. And with the strong uptrend in yields, I would favor eventually the dollar breaking out to the high side. On that note, thank you all for tuning in. Please give this video a big like down below. Visit our website at tradingcapital.ca to see whether or not we can help you out with your trading abilities And our main goal is to try to educate, share information, because there's so many aspects of the market to continue to watch, and we're always learning from